Did I forget today was a holiday? What's up? Man, oh man, quiet. Nice little rally from the overnight lows. But geez, can it get any quieter than this? Look at that volume. No, I don't know. We'll see. Very, very quiet. Not a lot going on. But your electricity prices are going higher thanks to AI. Um, You're losing the jobs are a lot more in danger now, thanks to AI. I don't know. I don't know what everybody thinks about it, but it's going to cause some grief. The grains were WASD report today. WASD, too much supply, too much supply got ripped. Um, like another government report. So, uh, anyways. Now here we are. Listen, markets are higher. S&P made a new high today. Dow made a new high today, I think. Actually, I'm not sure about the Dow. Yep. The only index not is the Nasdaq so far. Yes, AI is here. It's going to create, I think it's going to create universal basic income. I don't think it's going to create anything good. That's my opinion. Again, it doesn't make me right. I just give you my opinion of what's going on. But obviously, we can see that there is issues, and of course, those there are the jobs that we're losing, and of course, you've got Nike, Amazon, Meta going to be doing a lot of layoffs this year, and of course, there will be a lot more white collar jobs taken down. I know. Listen, you guys may forget this, but I used to talk about this about Domino's Pizza. They had developed a machine years ago that could actually run a store with one person just to operate the machine for 70 grand. That was years ago. Okay. Again, I know it's coming. I think that we should think about it before we destroy all these jobs and all these people that it's going to destroy. It's going to destroy business. It's going to destroy a lot of things. So yes, I understand technology. I understand what's going on. I'm glad you retired. Me too. Me too. I mean, what's going to happen to the real estate bubble that we are in? Okay. If people don't have jobs, how are they going to buy houses? Think about that. Okay. Think about the number of layoffs we've seen. Think about the jobs. Okay. And think about who's going to be able to buy or pay for the next house. Again, look what's going on in California with the wealth tax now, 5% potentially. Would you live there? Again, look, at the end of the day, it is what it is. Okay. But 100 companies, including Nike and Amazon, are talking about layoffs. So, again, the overall picture is not bright. Um, you've got the mess going on in Iran, and what should we do there? Should we stay out? Should we blow them up? What should we do with Iran? What's the consensus here? Just out of curiosity. Anybody got thoughts? Okay. Yeah, I mean, again, so we have all this stuff going on, not to mention what's going on right here in this country, not to mention what's going on in Minneapolis. Okay. What a shit show that is. Okay. So again, remember, you and me get to pay for all this crap. Okay. Whatever gets done, remember who funds the government. We do. Okay. Pretty sad, pretty tragic. But again, I think that is the Supreme Court going to rule against Trump's tariffs? How are we going to manage Caracas when we can't manage Chicago? True, true. Hey, again, I think that we're totally out of whack. Okay. I think we've got all kinds of issues that need to be addressed, and it's unfortunate that we get the bill for the problems. And I think that they should be sending in more troops, more National Guard, more whatever into all these cities. Okay, but we don't want to follow the laws that are as they are written. So I don't know. It doesn't make sense to me. That's the way I look at it. It does not make what's going on in this country today does not make sense to me. But again, hey, you know, I don't get it. But in the meantime, markets continue to push higher. Now you can talk about the K-shaped economy, which we've talked about very much here, and it's showing its colors. Okay, more and more people are starving and struggling to make ends meet. We are seeing more and more debt being able to push down the road, and of course you've got President Trump talking about making mandatory interest rates on up to 10% on credit cards. What do you guys think about that? What's your thought? I have a thought, and I will give it. I'm just curious what everybody thinks about the president or the government getting involved in what interest rates should be. BS. I concur. Okay. See, here's the problem. Okay. Slowly but surely, we've gotten away. What's up, everybody? How are you, Jim? We've gotten away from the free market. Okay. Now, it is my opinion. Okay. It is my opinion that the free market should decide what interest rate should be. It is my opinion that if people are silly enough to pay usury rates for credit card bills, then they should pay it. 10%. Right now they're 30%. But if I loan somebody at 30%, they'd call it usury rates, but credit card companies do it every day. So what do you think? I mean, wouldn't it be better and wiser if the free market decided what the prices were and the government stayed the hell out of what's going on? Wouldn't that be a better thing to look at? I mean, I know that I'm sick of it. Again, you look at these interest rate markets. I mean, they're still not coming down. You can hear all you want about rate cuts. They're still not, the interest rates are not coming down. So again, I'm a big believer in the free market, and unfortunately, they continue to steal the free market away from us. So we'll see. I'm glad I'm old. I'm glad it's not going to affect me as much, but certainly I feel bad for anybody young because I don't like the overall direction of what's going on. But again, that's just one man's opinion. I know you're ready, Connie, but I will ask anyways. Are you ready? Okay. So the dollar, okay, is just churning. It did break out. So what do we have now? Well, if we go by what we look at, we would assume now that 98 cents should be now support. Okay. And now our next resistance is probably about a buck. Okay. Now it doesn't mean it won't break back down, but it did come off the bottoms. It does look pretty good. It looks pretty solid. And our assumption would be that the 98 cents should hold the support. So we'd say 98 cents to a dollar. Now again, obviously, is that the gospel? Is that a 100% guarantee? No. But you have to understand where you sit, the kind of action, because certainly off of the bottom, off of support here, first of all, we made a higher low. Okay, we found support, and now we're moving up again. So let's see if this makes another higher low at 98 cents. So for now, it's 98 cents to a dollar. The euro currency, all right, well, here we are. We're right on support, which is 116. Okay, a little bit above, but 116 to 118. This has not changed. So, again, obviously there's little nuances within the market, but basically this hasn't changed. 116 to 118, that's basically where we're at. Okay, and right now we're dead in the middle at 117. The notes, well, again, these going down, which they are, they're still 112 to 113, but these going down mean that interest rates are going higher. So we can talk all we want about what the Fed is doing about interest rates. But in the meantime, when they started cutting rates, the 10-year notes were 3.99. Anybody know what the 10-year notes are today? Anybody know? Just out of curiosity. They're 4.9, excuse me, 4.19. So the Fed has cut rates twice. In the meantime, your borrowing rate has gone higher. So this is 112 to 113. Now, this is, again, we talked about this as the potential head and shoulders, right? Well, right at the neckline. If they break, they could go lower, which means interest rates are going higher. The bonds, Zulu Bravo, they're still stuck. The range is tightened, 114 and a half to 116. We're dead in the middle. Okay. But the 30-year interest rates are going higher as well. I get a little sell-off here. See, usually get a rally here. Now we're getting a little sell-off. But the action was so slow today. Anybody trade today much? Anybody do much trading today? It was really quiet. So on Bitcoin, nice little rally, but really 88 to 96, which is exactly where we set it up last week. SPY options good. 88 to 96,000. Look, this is making some pretty good solid consolidation. It looks like it's made a potential higher low. So again, I would trade the range or look for another way to trade it. But right now, there's not much to do here. Gold exploded. Okay. Once again, the metals continue to go higher. Why do the metals continue to go higher? Anybody got a hint as to why the metals keep going higher? Anybody got a guess? Central banks buying? Could be. But it also has a lot to do with debt. Okay. It's got a lot to do with government debt and it's got to do with inflation. This is telling you that inflation is going higher. Okay. The rise in metals are a gauge against inflation. In the meantime, we made a new high. As we said last week, 4,600 was an area we'd be looking at. It looks like now we're probably going to go to the next 100, which would be 4,700. I don't really see any reason to anxiously want to sell here. I think that you're looking at now 4,500 to 4,700. We have broken out. We'll see how it trades out, but they are out of control. Okay, and again, this market. How long can a market can remain out of control? Anybody know? Anybody got a guess there? How long a market can remain out of control? Until it resolves itself. Nobody knows. That's exactly the answer. Okay. We have no idea. Okay. It'll be crazy until it's not crazy. Look at what's going on in the silver market. But in the meantime, 45 to 47. Silver, look at this market. It did come in a little bit, but here we had the blow off, which happened actually overnight, the sell off right back to support at 70, the rally consolidation, and then the big breakout. So for now, we have to look at 80 as support. And again, where's the resistance? Shit, I don't know. I would be looking at probably 88. Okay, that would be logical to me. And I've moved these. For those of you who trade with me every day, we use 3 standard deviations. My audio is working fine. Yes. Right? Everybody can hear me. Is that correct? So at the end of the day, okay, again, the next stop logically might be, up at 88 cents. When is the last time we have seen moves in gold and in silver? Let's use silver for now. $7, $8, $9 a day. Okay. So again, 88 is probably support. 3 standard deviations out right now would be somewhere around 90 because that's what I switched to. That's what I was saying before I stopped. So again, right now, 80 to 88. But I am not in a hurry to get short. Give me another volume day though, and I'll be in a hurry to take a shot to the short side. Okay. Platinum continues to charge higher, but look at platinum is really still stuck in that 2100 to 2500, and it's looking a little bit like silver, but it hasn't had the breakout yet like silver. Okay. But you can expect to probably see that same type of action. Does that make sense? Okay. So we don't know, but that makes sense because chart patterns repeat themselves no matter what you're looking at. Copper continues to explode. It seems like it's found where our resistance was about 603, which is right about where we are. Okay. Again, it looks great. All right. Came out of consolidation, broke to the upside, continues to run. Maybe a little bit overdone, but it's hard. It's hard to want to do anything. I certainly don't want to be a seller here. Okay. I need a reason to want to be a seller. I mean, if we got to 630 right now, I'd consider being a seller. If we got a huge rally up on heavy volume, I'd consider being a seller. But as long as volume remains relatively light, I'm not really all that interested. Okay. So for today, it looks to me like we're 575, 580 to 603. But again, it can go through 603 like a hot knife through butter. I'll look at that one. Remind me about that one later. Grain markets got absolutely clobbered. Okay. Now, why did they get clobbered? Well, you had a report today. Uh, Thanks for doing my Netflix roll. Great. Nice job. You're welcome. My pleasure. You got the WASDE report, which is supply and demand and whatever, and planting and harvesting, and it was huge. They underestimated. Okay. Now, if you're a farmer in Indiana, Iowa, Illinois, no big deal. You got enough crops to overcome the lower price. But if you're got grains in the Dakotas or Minneapolis, you got problems. Okay. In the meantime, look, straight out, this is one product that I would take a shot at. Okay. If I were going to do anything, I'd be a buyer. I'm not telling you to go and buy them. I'm saying I would be a buyer. And I will be a buyer at $5 if they get down there. Wheat, I think, is five, and I think now 520. Corn, look at that. Ugly. I'd be a buyer of corn probably down around 410 if it got there. And I think resistance is now 430. And the soybeans, yeah, they're really just consolidating. Still 1040, which is tax time, to 1080. But if you were looking for something, and again, I'm not encouraging you to do this. I am telling you that I would consider buying any or all as a potential risk trade. Okay. I am not encouraging you to do so. Cattle continues to just kind of sit between 230 and 240. There is one thing to look at in the cattle market. Again, I'm not, I've done my damage to myself in the cattle markets. I've done good, I've done bad. I'm sitting it on the sidelines right now. But I will tell you one thing if you do want to trade them, one thing to look at is what they call the forward curve. You can see the prices are coming down, telling you that there's a little bit of bearish activity into the future. Should you sell them because of that? No. But if you have a reason, that's something to look at. Okay. The prices are getting cheaper as you go on. In the meantime, 230 to 240 feeders, which I don't trade, but they're just look at how tightly they're wound. I mean, they're hovering at 360. I think you just watch that 360 area and see how they trade from there. Looks like they want to make another run. Certainly, this is not bearish action. And the hog market got hurt a little bit today. But at the end of the day, the one thing you want to know about the hog market now is the opposite of what's going on in the cattle market. The forward curve, looking out into the future, the prices are getting much more expensive. If you go out into next year, April to June, you're into the dollars. Okay, so that's more of a bullish look. That's looking out into the curve. Natural gas, well, came down to exactly what we thought, 320, and bounced right off of it. Okay, certainly we thought that we should have been sellers up here, if you recall. and I thought we should be buyers down here. And I think the soft winter damage has been done from a fundamental standpoint. Now we're not fundamental traders, but certainly I would have no problem being a buyer at 320 or 315. I think you got a chance for them to run all the way up to 380 again. Okay. Remember, whatever drove them lower, obviously was price, but whatever drove them lower, typically markets tend to overextend in one direction or the other. Okay. So for now, 320 to 380. But certainly if I were going to lean to a side, I'd lean to be a buyer. And crude, okay. Crude is trying to break out. I think 60 is the spot that I'd be a seller. Okay. I think you're 55 to 60. I see no reason to believe that we're going a lot higher. I think this says a lot about the economy as well with the weak crude prices. But certainly I would look to be a seller. Okay. And I see no other reason to want to be involved here. Because again, if I'm right on the economy, and I may be wrong, but if I'm right on the economy, demand for oil will continue to lessen, which would equal coming down to lower prices. And it wouldn't surprise me is if this year we get under 50. Now, I'm not predicting, I'm not telling you to act accordingly. I'm telling you based on the overall economy. And does anybody here think the economy is really super and really good in general? Just out of curiosity. Does anybody think we're really in good shape from a economy standpoint for the masses? That's what I think. Okay. Not for the masses. Correct. For guys like you, for rich guys like you, it's great. But for the masses, no bueno. Any questions before I flip over to part two?
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.